Okay, again, everyone. My name is Kevin Kelly. I'm the Director of Community Economic Development here at the Partnership. Welcome to today's webinar, which is on credit reporting. Today's speaker is Talia Kahn-Kravis with Credit Builders Alliance. We'll talk about how community action agencies that operate affordable rental housing can report the rent payments to national credit bureaus and help improve their residents' credit scores. Some community action agencies have already been reporting to CBA on the small business loans that they make. This is an expansion into a new area, so we'll be able to do this as well now. I should note that in the past, I was one of the founding members of the Credit Builders Alliance at a previous job, and also worked for a local microlender, and we were reporting to the Credit Builders Alliance on the loans that we made to our borrowers. So I've seen firsthand what a benefit this is to the low-income people that we all work with, and how it's been a way to boost credit scores, which is essentially an asset. You're helping to give these folks an asset that is really worth money, as you'll hear about in Talia's presentation. So at this point, I'm going to turn things over to Talia.
Thanks so much, and I didn't know that you were a founding member, so that was great to hear. So I'm Talia Kahn-Kravis, and I am the Manager of Program Innovations and Business Development at Credit Builders Alliance, and I'm thrilled to be talking with you all about rent reporting. Today, I'm going to just tell you a little bit more about CBA, and then we'll really dig into the basics of rent reporting, what it is, how it works, what we've seen in terms of impact, answer a few or go through a few frequently asked questions, but then also we'll have time to answer your questions. So just feel free to enter questions into the chat box as we go, and we'll either get to it as we go along. Kevin has said that he'll interrupt me if it makes sense to answer some of your questions in a moment, or save them for the end. So feel free to use that the Q&A box with frequency. So here's a little bit about Credit Builders Alliance. As Kevin mentioned, we were founded about 11 years ago as a way for nonprofits to support to report their loans, so their business or consumer loans, to the credit bureaus. And now, since then, CBA has over 500 members, and we've brought in our programs beyond just the reporting of loans to a number of different services. And so we see ourselves as a bridge between nonprofits and the credit industry as a way of spurring financial inclusion. And our mission is to help organizations move people from poverty to prosperity through credit building. So we really love all things having to do with credit building. And our philosophy is that good credit is an asset, and that mission-driven nonprofits and other entities are uniquely positioned to help the households they serve build credit as an asset, which is often the foundational asset to other wealth-building opportunities. And we see rent reporting as one of the key tools of asset building, a very low-risk way to help people build assets. And so just going back to a little more general information about CBA, our credit building community is diverse. We have a wide variety of member organizations, including community development, financial institution, loan funds, micro-enterprise development organizations, small credit unions, and many social service agencies, including community action agencies like you on the line, affordable housing organizations, LISC opportunity centers, and it goes on. Through our members, CBA services touch hundreds of thousands of clients in urban, semi-urban, rural, and tribal areas, all related to financial capability and credit building. So our membership is primarily organizations focused on serving low and moderate income households and small businesses and those communities who have been traditionally excluded from the financial mainstream. And I'll just briefly share what our services entail. We have three main services. One is that reporter service that helps nonprofit lenders report their loans to the credit bureaus. So we serve as the data amalgamator, and we pass that information on to the bureaus and help with Fair Credit Reporting Act compliance. We also have a service called CBA Access, which helps organizations access consumer reports, and those include the credit reports from all three bureaus, but then also alternative data reports. And those can be used for underwriting purposes, for outcome tracking, financial coaching, so a myriad of reasons why your members pull credit reports and other types of data. And then we have a training and consulting department, which is really focused on equipping practitioners that are serving clients, low to moderate income clients seeking to build credit. And we equip practitioners with the tools and knowledge to help them do so. So we have a training institute online where you can access e-modules on credit building, stay informed on updates in the credit industry. We can help with technical assistance related to program development around credit building, and that's where our rent reporting department or program falls under. We help with access to the rent reporting service and then also program design around rent reporting. So enough about all, there's a lot that CBA does, and I could go on, but I'm going to zoom in on rent reporting. So what is rent reporting? Rent reporting is the regular monthly reporting of tenant rent payments to at least one of the major consumer credit bureaus for inclusion on consumer credit reports. And at CBA, we really think about rent reporting as not just an individual thing, but we think of it as in its ideal implementation, it's paired with credit building services as well. So it's the tool and can be paired with credit or financial coaching or education and asset building programs to support residents in building credit to achieve their financial goals. So we really want to see rent reporting as that launch pad to help residents work towards their goals that relate back to credit. And so why credit building for renters? Historically, renters have not gotten credit for their credit for rent on their credit reports, whereas mortgage holders get that credit every month. There are 45 million consumers out there with no credit scores because they have no or thin credit files. And we know that renters are more likely to have minimal or no credit history compared to homeowners. And renters also have less savings and wealth. In 2016, the median net worth of a renter household was $5,000 compared to $230,000 for an owner household. And so although millions of middle and high income households rent their homes, low income and low wealth households make up a large segment of the market. Over 25% of renters are extremely low income, having a household income at or below the poverty level, or 30% of the area median income. So we know that it's really important to connect renters to low-risk opportunities for credit building. And so just to hit home all the reasons why we think rent reporting is important, through rent reporting, residents gain the opportunity to build credit without assuming additional debt through the establishment of a new positive active trade line on their report. So they're really not having to do anything different than they were already doing. They're just getting this, one of their biggest monthly bills added to their credit report. For property managers, it's a low-cost way to incentivize on-time payments. Some recent research came out from TransUnion that said 7 in 10 renters are more likely to make on-time rent payments if their rent is reported to the credit bureaus. And then for resident service providers, it's a way to convert financial education programs into financial capability programs. So you're not just providing the knowledge, but it's a tool to pair with the knowledge. And so you can include this product and provide wraparound education. And we've really seen it as a way for resident service providers to better connect with their residents and build trust. This isn't on here, and I don't have a ton of slides about that, but I'm happy to bring this up if this applies to people on the call. But it's also a tool for financial capability service providers. Maybe you are not tied to a specific place, like a house-based property, but this can be a tool, a coaching tool that financial coaches or other social service providers can connect people to work on meeting their goals. So happy to talk about that more if you're not associated with an actual housing entity. And then one more, making the case for rent reporting, but we know that credit impacts all areas of our life. So from access to financial products to transitioning to next housing, your credit is pulled. If you want to establish a utility or a new cell phone, credit is looked at, and often you have a higher security deposit. If you have low credit for insurance products, especially car insurance, that the pricing is really based around credit. Sometimes more so than your driving history. And then credit really is that underlying asset that can connect you to other asset building opportunities. And in some states, not all in the U.S., credit is used in employment decisions. So really important, and rent reporting is just one more way that consumers can get a line of credit on their report. And we see this being very valuable for people that have never had experience with credit. So maybe they are turning 19 or in their 20s and ready to establish credit for the first time, or they are new to the U.S. and need a way to establish credit. It can often be a catch-22. If you don't have credit, it's hard to get credit. So this is a way to get credit. And then for those who have had bad experiences with credit in the past and want to find ways to shift that, and start building their credit and working on it. So where has this happened before? This map isn't fully comprehensive, and it's not the best map because you can't see all the dots. But these dots represent all the places that CBA has worked with housing providers to implement rent reporting. We've helped over 30 agencies get set up to report their residents' rent. And this all started in 2012, when the bureaus decided that they would accept rental payments as something that they would incorporate into credit reports. So at that time, CBA got really excited that this would be a possibility, and we initiated a pilot with 8 different housing providers. Those are the dots in blue. You can't see them all, but we worked with 8 different housing providers starting in 2012 to really to make the value proposition and see what happens when residents start reporting their rent to the credit bureaus. And I'll show you some of the results from that pilot in a second. But since then, we felt like that pilot really did make the case that there is a large impact, and we've gone on to support other housing providers all across the country to get set up, and including in the past year and a half, we developed our own platform for rent reporting. And so 12 of these dots represent groups that are reporting through our CBA-Esusu rent reporting platform, which I'll talk a little bit more about as well. So what did we learn from the pilot? So during the pilot, almost 1,000 renters signed up, 1,000 renters across 8 housing entities signed up. Of those, about 6% had no score from the start, and we found that of those that started with no score, so about 60 people, 100% became scoreable throughout the pilot. So in the pilot, groups paired rent reporting with financial coaching and asset building programming. They leveraged their own existing targeted programming, but provided different programs. And we found that the financial capability programming paired very well with rent reporting. And we sought to isolate the impact of rent reporting on credits, on residents' individual credit reports and scores. So we partnered with Experian Rent Bureau to pull credit reports and scores at one point in time. So basically, after residents enrolled, it was between, they didn't all enroll at once, but between 6 months to a year, we looked at their credit scores and then removed the rental trade line and looked at what their credit scores would be without that rental trade line. So it was a simulation of their scores. And so we found specifically for these that didn't have a score, 100% became scoreable. Of those, 72% became scoreable in the prime risk tier. So they had an average credit score of 688. 28% of those became scoreable in the non-prime tier. So they had an average score of 646, and none ended up in the subprime category. So this was really promising. And next I'll show you just the results from those that started off with a score. So the majority of residents that enrolled in our pilot had a credit score. And from this on the left, you'll see just our overall results. So 79% experienced an increase in credit scores. 14% saw no change. And across the board, the average increase in score was 23 points on their credit report. I'll just mention 7% saw a decrease in score, but that decrease was very minimal. It was no more than 11 points, which often doesn't make a difference in risk tier. And then we saw that those that started off with subprime scores had the most gains. So on average, those that started off with a subprime score, their score went up 32 points. Whereas those that started in a prime score, so their score was already high, they went up an average of 4 points, and non-prime 10 points. So we see that, again, this really has strong impact on those that are starting with no score, so little experience with credit, and those that have subprime scores, so they've had damaged credit in the past. So how are people doing rent reporting is the million-dollar question. There are 3 different ways of doing rent reporting. When we first got into this space, the only way to do rent reporting was credentialing with one of the 3 credit bureaus. And at the time, Experian had a little bit more of a delineated process for setting up. So all of those in our pilot went through the direct credentialing with Experian Rent Bureau. And so they are the data furnishers to the Rent Bureau. Another way, since then, there's been a whole field of third-party payment processors that have emerged. So this option is you are contracting a third-party payment processor, so someone that is collecting residents' rent for you and then reporting that on to the bureaus. And then the third option, which is the space that CBA has become involved in, are fintech data processing platforms. So CBA has a partnership with Esusu Financial, a financial technology company, and they are the data processors. So basically the housing providers are contracting Esusu, in this case, to to filter and do the data processing and formatting and transferring to the credit bureaus, and they take on a lot of the compliance responsibilities as well. So those are the three options. I'm not going to go into them in depth today because there are pros and cons to each of them, and I'm happy to talk to anyone outside of this webinar about those pros and cons. And I'm going to dig into what CBA has really been focusing on in the past year and a half, that the FinTech partnership, and tell you more about how you can implement rent reporting in that way. So we started the CBA-Esusu Rent Reporter. Let me actually go to the next slide and then I'll go back. So we created the CBA-Esusu Rent Reporter platform because we had experience with the other options, and we really wanted to create an option in which affordable housing providers are in the driver's seat. So our focus users are people that are serving low to moderate income populations, and so we wanted to create a platform that makes it really easy for affordable housing providers of all sizes and shapes and forms to implement rent reporting. Our platform has limited technical configuration, so it doesn't matter what property management software you're using. There's no requirements for tenants. So in past options, tenants might have had to pay online or switch the way that they pay or set up a profile somewhere, and we found that that was a barrier. So for tenants through our platform, they don't have to change anything they're doing. They're just opting in to saying, I want my rent to be reported to the credit bureaus. Again, it accommodates housing providers of all sizes, whether you serve, right now we're working with a housing provider that provides transitional housing for people transitioning out of houselessness and into transitional housing for a year, and they serve 20 people. And then we're also working with a housing provider that has 15,000 units. So it accommodates any size. In our platform, another disconnect we saw in some of the other options, but also caveat, the field is always evolving. But we saw that there was a disconnect between the rent reporting option and being able to track outcomes. So in our CBA-Esusu platform, you're provided with a dashboard that shows overall where did your tenants start in terms of their credit score, and how are their scores changing correlated to rent reporting. And then we provide responsive customer service because it's not always easy to be handling a lot of data, and so we're here to support you at all times. So I'll just go back and tell you a little bit more about Esusu. I've told you about CBA, but I'll just say, one of the reasons why we wanted to create this platform is that we learned a lot from the housing providers that we were working with, and we wanted to be able to lift up their feedback and best practices and create something that would fit this space. And then in terms of Esusu is a financial technology firm or company, and they're mission-driven. So they started off by providing lending circles. They have an app in which they provide lending circles. So that's where people get together and they put money in a pot or proverbial pot, and each person can withdraw those funds, taking turns once a month, and that's been a cultural tradition in many countries and adapted to American culture and serves as a way of credit building. And so they also have expertise in data management and programming. So they're really providing that technical piece, and CBA is providing a lot of our lessons learned and training and credit building integration into the technical piece of rent reporting. So the process is that we'll work with housing providers to prepare you to implement rent reporting. So we work with you to think about, what is my environment? How can I reach tenants? What should this program look like for me? What do I actually have the capacity to do versus what do I maybe hope to do some days down the line? Where do I need to bring in outside partners? What am I going to do myself? And so we'll work with you on all the programmatic pieces. The housing provider then works on the technical pieces. So, and that's a fairly simple process of submitting rental payment data to Esusu. And so there's a report with very basic information that you compile on those that have opted in. Esusu transforms the data through the rent reporting platform in the different formats required by the bureaus. The bureaus process the data and add it to people's credit reports, and then housing providers can look on their screens, on their dashboards, and measure rent reporting's impact on their tenants over time and continue supporting tenants over time. There's a bunch of different components to implementation. I would say if you're thinking about this, you know, it can be a small lift to a large lift depending on how much programming you want to build out around this. And so there's the onboarding piece and technical configuration, and that doesn't take very long. It just requires some attention on your side to specific documents and thinking about how you're gonna report the data. And we have a lot of guidance and can also work on scripts with your property management software. There's the piece on doing outreach to residents and raising awareness that this is an option for them. There's enrolling residents, which could be signing a consent form, or it could be offering whole classes around credit building and rent reporting. So it's really up to you and your capacity. Then you start reporting the rental payments on a monthly basis, which can be a pretty quick process, and then support residents in achieving their financial goals. So as I said, CBA is here to help with the programmatic integration of this, and we really don't want groups to be recreating the wheel, because we've seen people implement and we've seen what works. And so we have a rent reporting toolkit that has flyers and posters and all the legal forms that you need, and sample policies and procedures, and a sample program manual, everything that we found that has proven useful to groups in the past. And we're always expanding this toolkit and filling it with resources and materials that can be useful for you. We also offer trainings around rent reporting, whether you decide to go with Esusu or pursue another option. We're happy to support you in program implementation. So we can provide program design support, and also really connect you with a community of other housing providers that are doing rent reporting. So there's some peer sharing. And what we've learned so far in our work with other housing providers is that you know, many are taking the approach of start small and scale. So they start off with one building and test out different tactics for enrolling residents and getting the word out, or providing wraparound credit building support. And then they take those lessons learned and expand to their other properties. The next two kind of pair with each other, but every housing entity has their own structure, and we found that for those that have separate resident service departments from property management, it's great when there is collaboration between the property managers and the housing entity, and even better when rent reporting is just embedded as an amenity or a thing that you talk about when someone is leasing up or recertifying with their lease. Another piece is, for any program, you need the trust of residents to increase the take-up rate and for them to know that this is something that you're doing for the benefit of them. We've also found, this has higher impact if it's paired with credit coaching or some kind of financial capability reporting support. And then lastly, the initial configuration, how will this program work? That learning curve of just creating the first report. The initial setup of the program takes the most capacity, and then over time it's pretty much smooth sailing, and we'll work with you to integrate this within your existing workflow and system. So we found typically that it's smooth sailing after the first report. And then just some trends across the board to know if your organization is a good fit. Our necessary stakeholders on board. So is the top leadership, do they believe that this is a good idea? Property management staff, if that's separate from the housing agency, and staff that are providing direct assistance to residents. And the staff that are providing direct assistance to residents can be internal or financial capability partners in the community. And then do you have capacity? So do you have a champion that can dedicate time to the initial setup process? Is there someone familiar with the property management software who can set up that initial report? And then do you have staff that are trusted by residents and have the ongoing capacity to outreach and enroll residents? And then there's a cost for rent reporting. So do you have the financial resources to offer rent reporting on an ongoing basis? And there's a one-time setup cost, which is $3,500, and then an ongoing cost based on number of units that you're serving. And happy to tell you more about that based on your size. So I'm just going to say a few of the frequently asked questions that we get. Sorry, I have a dog squeaking a toy in the background. Hopefully that's not too much of a distraction. So some frequently asked questions. Does rental information show up on the credit report as an installment or revolving account? It's actually neither. It's a open trade line. So when this initially started, the bureaus weren't exactly sure how to treat the rental trade lines because it's not quite an installment where, like a loan, you have a finite amount of payments to make and then it's over. A revolving account, like a credit card, where you're taking money out each month and paying it back, and that happens over and over again. So it's a trade line. So each month there's the amount that's owed is the amount of rent that's due, and when that rent is paid, the balance is zero, and that just happens on an ongoing basis. So this is responsive to changes in rent amounts, and so that's just a helpful thing to know especially for affordable housing providers. Are rental trade lines factored into all credit scores? No, only newer scores, including the Vantage Score 3 and 4 and FICO 9, are optimized for rental data. So this is really important to know. The rental trade line, once residents sign in and opt in to rent reporting, the score will show up on their credit reports, but it's only factored into newer scores. And this is something that will hopefully the newer scores are being utilized more and more over time, but the industry takes a long time to shift, and specifically the lending industry takes a long time to shift and adapt newer scores. So we're seeing the GSEs are considering utilizing newer credit scores, and that's under consideration right now. And so we see rent reporting as this gateway product that, even if it's not used at the moment for mortgage decisions, it can help residents access other credit building products that will be factored into other more mainstream lending decisions. And then we also see that, eventually the industry is going to shift to be using these new scores, and those that have signed up for rent reporting will be ready for that. So how do residents enroll? I have this question just to remind myself to note that the Privacy Act of 1974 requires that any residents that are in a property that's receiving federal subsidies, or residents that receive federal subsidies for their housing themselves, are required to opt into rent reporting. So affordable housing agencies with federal subsidies can't just default opt everyone in. It has to be a decision that the renter makes, and we think that's great, because then you're having that conversation with the renter. What are potential negative impacts of rent reporting? Through our platform, so this is treated a little bit differently by the different bureaus, but for the most part, payments 30 days past due are reported as late. So we really urge rental housing providers to work with residents to determine if they are a good fit for rent reporting right now. And so if people are chronically late on their rent, and late again is just over a month past due on their rent, then they're not a good fit. But they're probably worried about other things in that case, and might not even be interested in enrolling in rent reporting, but we have guidance around how do you do this assessment with residents and help them determine if they are the right fit for rent reporting. So late and on-time payments are reported, but again, it's a different definition than what typical housing providers use as late. Another potential negative impact is that one of the factors in your credit score is the average length of credit history. So once you add on a new line, that can shorten the average length. We see that this is generally a short-term dip. And also through rent reporting, when you're enrolling residents, you have the option to report up to 2 years in back payments. So that can actually sometimes serve as a way to lengthen people's credit history. So it just depends on the person. And then also we know that credit scores are just a point in time algorithm, and as that people's credit profiles change, they move within different scorecards and are compared to different people within the credit scoring system. And so when you add a new line, that might put you in a different scorecard and shift your score relative to other consumers. But in general, all that said, we have seen that on average, this helps people and boosts their score, and does not often negatively impact their score, but also we can never say for sure to an individual renter, just because people's credit histories are just so different from each other. So it's very nuanced. And then what will a rental trade line look on a credit report? So it will look like other items on a credit report. So this is just an example of a TransUnion report, and it shows the housing provider, some of the account information. If the payment is on time, it will show, okay, the number 3, the date opened will be the date that it started reporting, and same with the report. It will be the data status will be updated each month that the tenant makes a payment. It's an open trade line. The monthly payment here, it reflects the amount that the resident owes, not the market rent. And same, number 9 is the amount the resident owes. 10 is typically the amount the resident owes, and the payment is also typically the amount the resident owes. So a lot of redundant numbers on here. It's an individual responsibility, so even if there are multiple people signed up on one lease, it will report as an individual responsibility. Anyone on a lease can enroll, and the status open, typically never late. And then I'll just, before I open it up for questions, if you want to learn more, we have a whole website on rent reporting. You can download our white paper on the pilot there. You can get some more information on rent reporting. There's a video with the perspective of a resident a resident from a housing authority in Portland, Oregon, and he talks about how rent reporting has impacted his life. If you look at the website and you still have questions, feel free to email me or set up a time to talk more if you want to talk about what this might look like at your organization. And if you have listened to this webinar and you're ready to roll and you know this is a good fit for you, you can take the first step by filling out our CBA inquiry form, and it's linked there. Again, this PowerPoint will go out after the presentation. And we also have some scholarships available. So I mentioned the one-time setup fee is $3,500. We have some limited scholarships to cover that cost for groups ready to get set up with rent reporting. And then we have a program where we're working with tribal housing entities. And so we have scholarships for those that are serving tribal communities to cover their first year costs, the setup and the annual fee. So if you're interested in either of those, let me know. And I will open it up to questions. And I see one in the chat box, so I'll start with that one. It says, can non-providers report rent payments to CBA? So I'm assuming this person means a non-housing provider, and there is, as of recent, there is a new way through Esusu that non-housing providers can report tenant payments through Esusu. And that is through an app that Esusu developed. And so I'm happy to send some more information about that. But basically, it's an app that, say you're a financial coach and you're going through a credit building plan with a client, and they decide that it makes sense to report their rent to the credit bureaus. You can help them sign up for this app. And what Esusu does through the app is it connects to their bank account. So the client has to be banked, and Esusu will go in and confirm that the rental payment has been made each month through the bank account transactions and report that to the credit bureaus. And so that would be just a resource that you connect renters to. And I'm happy to, if you're interested in that and want to learn more, contact me and I can connect you to Esusu and some of our trainings around that as well. And I see another question: how does this work for renters who have a TIN number instead of a social security number? So this works for people without a social security number. And basically, there's a report that you create every month, and it has different fields. A section of it is personal information on the renter, and basically you just don't fill out the social security number, and Esusu will report for them. So we think this is a great way for people with an ITIN number to build credit. And we know that there's not a lot of options out there for people that don't have a social security number. So this is one of those options that can help. let's see.
I've got several questions for Q&A here, also Talia. Do all renters automatically report payments received to bureaus, or does it depend on their processes?
Yeah. Sorry, could you repeat that question? Do renters automatically report payments
received to bureaus, or does it depend on their processes?
Well, when residents opt in to report, then the housing provider typically automatically will then move on and report their payments every month. And so we urge housing providers to have a review system where they're looking at, is this person reporting positively? Okay, great, we'll keep reporting this. If it's negative, then we urge them to do some other investigation and contact the resident to let them know that it's going to be negatively reported, so that, yeah, so I guess the answer is it does depend on the housing provider's processes, but the resident is having to opt in. So if a landlord signs up to report those rents to the credit bureaus, it's not just all of a sudden the renters are having their rent reported. It's they have to sign up for it and know that it's happening.
Okay, which credit bureau do you use for renters in Texas, and what is the monthly service charge amount?
Yeah, so sorry, I'm trying to open up the Q&A so I can see it as well. The Esusu currently reports to Equifax, and we'll soon be reporting to Experian next month, and then shortly after we'll be reporting to TransUnion. So all three pretty soon. And the monthly charges, it's typically an annual charge, and it is based on the size of the housing provider, and ranges anywhere from $1,500 to $10,000. So $1,500 for housing providers that have units of 100 or less, and $10,000 for housing providers that have 5,000 or more units, and we're pretty flexible about the service costs, and so our mission is to serve nonprofit housing providers or affordable housing providers. So if cost is a barrier and your organization is interested in implementing rent reporting, we're happy to talk with you about that.
Can private owners with only a few rental units use this as well?
Yes, private owners with only a few rental units, there's no minimum on number of tenants that you have, so definitely.
There's a question about the PowerPoint. Yes, we're going to send a PowerPoint out to everybody who registered for the call today. Can you spell the name of the app that you mentioned?
Yeah, the name of the app is the same as our our fintech partner, so it's Esusu, and I'll just type it in the box. And I believe I didn't quite answer that question, which credit bureau is used for renters in Texas. You know, all three credit bureaus are national credit bureaus, so they're taking data from consumers all over the country. So Texas, you know, residents are no different than New York residents or Washington residents. So, you know, all three credit bureaus, and the credit bureaus have different footprint areas in which they focus. So sometimes that means that they are able to collect more data from the areas that they're in, but typically all three, while the information may vary somewhat on what's on each credit report, they're all aiming to collect comprehensive credit information for all consumers.
Okay, there's a question about the amount that you quoted. Is that for a year or monthly?
Yeah, a year. It's annual.
Okay, let me go back to the chat here. Okay, people are asking for your email. It's not on the slide.
Oh, okay. Well, you're welcome to use that rent reporting at creditbuildersalliance.org. Yeah, I would say for any rent reporting questions, that is the best one to email, and that goes to me. So typically I'll be the one to answer, but just in case I am not in that day, there's backup people. So I would say use the one in the PowerPoint, and I'll just put that in here.
Do you have materials that we can send out to partners regarding this process?
Yes, and I would say the best materials are you can use this webinar. There's materials on our website that have, our website has a 2-pager on CBA-Esusu Rent Reporter and a checklist to know if you're ready for rent reporting and some more information on the cost. So if you go to our website, which is creditbuildersalliance.org/rent reporting, I think that's the link, but it's linked here, and you can get more materials there, and always happy to email rent reporting at creditbuildersalliance.org. If there's something you don't see up there that would be helpful, I'm happy to send you any materials.
Okay, let me see if anything else. I think that's it. Somebody asked me about the chat quite a bit. In my reading the questions, you'll get that. This is all being recorded, and you'll get the link to the recording. So that's all I see, unless anybody can have anything else to add here.
Okay, great. Well, yeah, if folks think of any questions that as they're processing and digesting this information, feel free to reach out. We're always happy to talk about rent reporting. And thank you, everyone, for joining today and listening in. And we hope to hear from you about implementing in your community down the line.
Yeah, thanks so much, Talia. That was very good information, and we ended up with a very good size audience on the call today. So I think we're pleased with that. So I hope to follow up with those of you on the phone, and let's see, is there any other questions? Just thanks, very informative. Okay, well, good afternoon to everybody, and thanks again for joining us today.
Thank you. Bye.
Bye.